If you're a typical American worker, you're getting about 2% less in your take-home pay. So what do you do about it? Well, in today's Your Money Matters, Mike Ruggiero from Ameriprise Financial is here to tell us about, well, first, tell us why we're getting, why is this 2% tax cut in effect now?
Well, the FICA tax is part of the Social Security tax, and it's been around since the 50s. And in 2010, to give Americans some relief in their paychecks, the government decided we're going to let this go away for a little bit.
It was part of an economic stimulus back then, right?
Yes. Yeah. So what happened with the whole fiscal cliff issue towards the end of the year, they pretty much let it sunset or expire, if you will, and then it came back into play or was turned back on in 2013, and everybody noticed the effects of it the first paycheck of this year.
Yeah, it's got to be hurting the economy a little bit, although there's some evidence today to suggest that Americans aren't feeling it that much. But what can we do about that?
Well, there are a few things you can do. You can, and I've been on before and we've talked about this many times, but you really want to take advantage of your employer's 401k and any IRAs that you may have out there. You want to be able to put money away tax deferred, because we all have to pay our taxes. It's just a matter of us as individuals being able to control when we pay those taxes.
Right, and especially IRAs as well. Even if your company you don't have a 401k sponsored plan, you can put money into an IRA, an individual account.
Yes, you can.
Let's take this time to go over the difference between a traditional IRA and a Roth. I do that every time I get you on, but you know what? We can never learn enough.
Well, the traditional IRA is just that you're putting money away tax deferred, and the Roth IRA is you're putting money away and you won't be taxed on it at the end, whereas the IRA, you will have to pay taxes when you take your distribution at the end, when you reach 59 and a half or 60 years old.
Let's talk about some of the new rules for 2013 regarding the maximum amount you can put in an IRA.
Well, for an IRA, the maximum amount right now for 2013 is $5,500. If you are 50 years old or above, there's a catch-up contribution, if you will, of $1,000, so you can put away $6,500. And for a 401k, the maximum contribution is $17,500.
What do you say to those people who just can't seem to come up with the money or save enough to put away for an IRA? It's important, isn't it?
It is very important, especially now. If you just have to budget better, and we as Americans all do. And I think that that has happened the last few years. Americans are budgeting better, and they are saving better. So take advantage of these vehicles. And also, if you haven't made your contributions for 2012, you still have until April 15th of this year to make your 2012 contribution.
And it's a great idea. You got to start scrambling now. You got a month or so to start coming up with the cash to do that.
Well, work with your CPA and your financial planner, but it's definitely worth doing in the long run.
Let's talk about some other things folks should be thinking about when it comes to taxes this year.
Well, you want to make sure that you work with your CPA. You want to make sure that there are any new tax laws that have come into effect that may be to your advantage. And make sure that you could possibly take care of any tax credits that may be owed to you also. Also, something else you may want to do is through your employer plan, they have these savings vehicles for child care or eyewear or transit expenses. These are things that you can pay for through your company before you get taxed on. And I don't think a lot of people do that.
Yeah, we just got a few seconds left. A health savings account's another one, right?
Yes, absolutely. That's something else that you can look into.
Right, but more importantly, a tax advisor can help you find those things that you may be overlooking, right?
Always work with the tax advisor and a financial planner to get the full benefits that are owed to you. Mike Ruggiero, good to have you in. Thank you for having me back. Okay. See you next time. Okay. For more information, visit Enterprise. Excuse me, again, I'm messing this up, AmeripriseAdvisors.com. If you want a link to that, just check out our website at WGNTV.com/midday.